General items. Item number 14, amendment to the 2011 recall. Oh, excuse me. This item has been pulled. So we'll move on to item number 15. Approval of matters related to the refinance of City of Yuba City's 2006 Gaucher Aquatic Park certificates of participation. Robin.
Good evening, Mayor and members of the City Council. This item relates to the refunding of the city's outstanding bonds for the Gaucher Aquatic Park, the GAP. This is very similar to a homeowner who's refinancing their home loan, their home mortgage to reduce their monthly payment and save interest cost over the long term. The purpose of any refinancing is typically to just take advantage of the market interest rates and lower your long-term borrowing costs by reducing the interest. Historically, when the city has refunded debt, we've put a limitation in that indicates we want to achieve a net present value savings of at least 5%. City Council approved this transaction at the last City Council meeting on September 15th. But in talking with our financial advisors, they were concerned that in today's market, we may not meet that 5% threshold. They indicated that in order to make the transaction more attractive to investors, bond rating agencies, bond insurers, and the investors themselves, we could securitize the debt by including an essential city asset as security in addition to the GAP facility. By doing so, they indicated that the city could increase savings from about 2.4 to over 5.7%. In dollars, this translates to increasing the savings from about $253,000 over the remaining term of the debt to $596,000, an increase of just under $350,000. So for that amount of savings, I wanted to come back and ask that your council reconsider and look at giving us the opportunity to achieve a higher savings level, to bring this back before you tonight, and ask you to provide additional security in the way of adding the city's corporation yard as an essential facility to maximize savings. We would still have flexibility down the road if we decided to take on a major improvement or expansion, building something new at the city's corporation yard, of substituting another essential city facility, such as a fire station, the police facility, or city hall. Not that we would. We have every intention of repaying our debt, which is why even when the state said we could no longer pay for half of the GAP bonds using redevelopment funds, we substituted with general fund money. So I'm not as concerned about what assets we use to securitize the debt, because we have plenty of other assets as well, but I'm interested in achieving as much long-term savings as possible. Our financial advisors tell us the cash flows would improve by about $65,000 per year if we undertake this refunding. And as part of tonight's consideration and the resolutions before you, we're also asking that you grant us the flexibility to either do a competitive bid or in a negotiated sale. The thought is that by adding the security of an essential city facility to this deal, that it'll be a lot more attractive and that we could go to a competitive bid and do very well with that. With that, I'll answer any questions you have.
All right. Just a comment before we go to that, Robin. Thank you for always being willing to look at these and think outside the box to be able to come up with solutions like this, rather than just setting it aside and saying that it's not enough to warrant doing it. So thank you for the efforts of doing that. Any questions of staff?
To Mayor, just is there any other identifiable risk by doing this that we would be taking on?
The main risk is that somehow we would have a default on our bonds, and I don't see us doing that.
Right.
We work too hard to have a good credit rating and manage the city's fiscal stability well.
Good.
Yeah, through the mayor, I just was going to echo something similar to that, and that's being proactive. And I kind of, like you said, it doesn't matter if it's a house or it's a building. When you're refinancing a loan by just giving up additional collateral, and if you can improve your cash flow and then also reduce your payments, why not? Right? And then in addition to that, I mean, I think we had some questions that you had already answered in reference to rates, savings, loan to values, and getting the collateral release if it got paid down. So I appreciate your answers to all those questions. So that's a great deal.
All right.
With that,
Mr. Mayor, I think that there's a member of the public who would like to comment on this.
All right. Open up public hearing. Mr. Ozeran, if you'd like to step to the podium.
Thank you, Mr. Mayor and members of the council. Actually, it's not a comment, it's really a question. I didn't see in the materials online or in staff's presentation if that the refinance would be for the same number of years or fewer as opposed to extending the length of the loan.
I'll let Robin answer that question for you.
Good question. I probably didn't cover that this time because I covered it last time, just changing the structure a little, but having to come back to council to do that. It is for the same term. It would still be, the final payment would be in 2036. I'm going to confirm that just to be sure. That is correct.
All right. Thank you, Robin. Any other questions from the audience? All right. Bring it back to the council here.
I'll make a motion to approve staff's recommendation.
All right. Have a motion and a second. Any further comments, discussion? All those in favor say aye. Aye. Opposed? Motion carries unanimously.